Good afternoon. This is Jim Perry at Perry Capital in Miami on March 13th. Stock market is down almost 10% from its all-time highs on February 19th. And investors want to know, is it going to go lower? Good question. I don't know. Would I bet on it going lower? I would. Why? Sentiment is so negative. It is unbelievable. The negative narrative is an emotional narrative, and if you make investment decisions based on emotions, most of the time you're going to be wrong. Patient, observational, data-driven, independent, objective analysis is the way to go. I think people have to recognize that the main reason the stock market's down 10% is because it's so expensive. For heaven's sakes, it was selling at 22 times forward earnings. Now it's 20 and a half. It's still very expensive, and it's higher than it was a year ago, and it's 750% higher than it was at the bottom of the great financial crisis in 2010. There's a lot of wealth in the stock market still. Who's selling? Leveraged traders who think that this country is uninvestable. Why do they think that? They're looking at the headlines and they're looking at the way this administration is imposing its agenda on the American people and our trading partners. Let's just call it politely undiplomatic. We could say a lot worse. I know many people do. I've been doing business internationally my entire career. I've got clients in Europe, all over the Commonwealth, Asia, the Middle East, and domestically. And our trading partners are furious, rightfully so. But are tariffs really going to go up by 25% against Mexico and Canada? I would doubt it. I think that the agenda of the administration is to isolate China and impose higher tariffs all over North America against an unfair government-subsidized Chinese export manufacturing machine, which is hurting the Western democracies. That is the truth. Secondly, government is just too big. They're spending money we don't have. The budget deficit's $2 trillion. If we can get it down by $500 billion this year, and I believe we can, the U.S. economy is going to flourish and the stock market will follow. Don't get too caught up in the negative stuff. Recognize that it's a correction and recognize that the stock market will follow the economy higher. I think you have to recognize that GDP is probably going to be something like 2%, maybe 3% in Q1, and corporate profitability in Q1 is going to be up 10%. The U.S. economy is doing fine. The stock market is going to continue to be led by the big cap, high-tech stocks in the Industrial Revolution, which is AI, and it is coming. Stay with it. Good luck. Let's talk next week. The fact is, it's going to be really volatile, and the negative narrative is taking hold. It's eventually going to go away because already investors are starting to cover those shorts, and it looks like we're trying to stabilize here. I would suggest to you that the 38.2% retracement of the entire move is something like the low 5,500 level in the S&Ps. I will put some money back into the market at that level. Maybe you should too. Be balanced, be fair, and recognize that the negative narrative is an emotional narrative, and if you make investment decisions based on emotions, most of the time you're going to be wrong. Patient, observational, data-driven, independent, objective analysis is the way to go. I'll be back shortly. Good luck with everything. We'll talk to you in a few days. Bye-bye.